Good morning, MMTs. I'm going to show you another bear called the SH. And the SH, one of the things I would like to point out is that the SH is called a ProShares Trust short S&P 500. It's another way that you can engage, and the volume on this one, the total volume was 4.43 million shares on Friday. In our application that we're using, which we own, SMF does, and MMTs, is I'm going to show you here that when we were, that you can once again learn to go long when the S&P was selling off. You buy down here. These are daily charts and these are daily movements. And you want to be able to position risk. So when the S&P was selling up, it was time to get net long. When the S&P broke out, just like in the we showed the SDS and the SSO, and now you have the SH that would go with that series of S&P 500 trades using these ETFs. So basically what I want to show everyone here, MMTs, is that when we were breaking out on last week, we went down 1 day, 2 day, 3 day, 4 day, 5 days, is you could have short this triple top up here. And when that fell in price as a short, shorting this bear, you could short bears. You can go long bears. You could short bears. Okay, so if I'm shorting a bear, then I'm going to obviously be long the SSO. Okay? And I can use the SDS. So I've got the SH, the SDS, and I've got the long side of the SSO. And we already showed those. So basically what I want people to understand is that we're going to set up some bottoms here. If we're going to move back up, and this was to break higher as we go into the July earnings season, is that the price volatility shows up in these ETFs in directional movements. How the pendulum was swinging. So we were overbought up here when we were oversold on the S&P. So when we were oversold on the S&P and the S&P was going to break out, this broke straight down. And whether you're trading index options on the S&P, whether you're using the three different types of ETFs, going long and going short, it's a very daily type movements that we had. But let us not forget that these are at extreme bottoms that were oversold, where the S&P broke higher and the bears broke down. When the S&P 500 was overbought, we were breaking out and building bases here, and we broke out to the all-time highs up here. And once again, we hit triple bottoms for the long side of the S&P and triple tops where the bear couldn't go higher. Shorting that down and going long at the same time is the right deal to do. Welcome to the SH. MMTs, load this into your workspace, because now you've got two bear and you have the long S&P, so that you're going to be able to watch these on an intraday level on a 3-minute chart, is that you're going to know where that S&P truly is between the bears and the bulls and what side of the market to be on. Being well diversified between the bear and the bull, where either we're going to get support somewhere in here and we're going to hit top end on others where resistances will come into play. So we may find support down here, and we may find resistances on other ones, and we're going to put that trade management on. How to trade the S&P using the SH, using the SDS, and the SSO as the bull that's in the other prior video. You would add this to the collection.